Hello Market Club members and fellow traders everywhere. Adam Hewison here, president of INO.com and co-founder of Market Club with your market update for Friday the 25th of April. Well, here we are. It's the last week of April, last weekend in April, and we're starting off today's broadcast by looking at Amazon. As you can see, the trend has been clearly down in the stock, and even with all the new things like the Amazon Fire TV and Prime Pantry and all these innovations that deal with HBO, the stock is still been going down. So the question is, how much further can it go? Well, the market is becoming very oversold naturally, but the key thing to look at here is we had a signal right here. This is in February. You can see the date right here. And the market has gone down. We had another weekly here that came in at $354. Currently trading at 307, which is obviously a substantial move from here to here. And can it go further? Well, looking at this stock, if we clear the picture and just go out a little bit, we'll take the trade triangles off and we'll put a Fibonacci in here from the highs right here all the way to this pretty important low. We think it's an important low here. So we could see this market actually crack the $300 level, even to 285, even down to the support level here. So I would think if we were to just a simple take a drawing from this level here, I think obviously it's the first level we've stopped at right here. This is the 38 level, but we could certainly see the market come down to this 50 level and again down to this 61.8% level. So let's see how this plays out, because obviously the trend is clearly down in Amazon, and I think that's the most important element to look at right now. We've got the RSI way below the 50 line. Everything is pretty negative right now, and there's no reason in my mind to rush in and buy the stock. Let's move on. Looking at the Dow looks like it's down for the week. Not very much, but you can see if you just look at this market just over the course of the last 4 or 5 months, it really has become this sort of big kind of trading range. It's a big sort of square with the market really not going anywhere in a hurry. You had little rallies, little fallbacks, but no real clear trend. With our trade triangles, you can see the trade triangles are showing a mixed trend. Obviously the major trend still positive, but the weekly trend is negative, indicating you should be on the sidelines in this market. Now the NASDAQ is a little bit different. If you remember, the Apple reported amazing earnings, pushed the NASDAQ up dramatically, but it's still negative. The trend for this index is still negative, and we still see it going lower. That's the key thing on this market. If we close again below 50 on the RSI, it'll accelerate the trend to the downside in our opinion. On the S&P 500, the S&P 500 is barely changed for the week. It's about flat, and again you can still see that sort of big box around this market with really no clear-cut direction or trend at the moment. Crude oil's reporting a pretty big negative week. We're down 2.5%, which is quite a lot. You can see our trade triangles are plus 55, indicating a trading range at the moment in this market. Now how we trade crude oil is basically the weekly for trend and the daily for timing. Always remember that. So you can see from 102.75 we're basically out of this market about $2 higher, and that's where we want to be at the moment. So let's move on. On the gold, you can see gold actually pushed down to new lows, recorded a nice comeback here. I think the next couple of weeks we'll see this market going higher as the situation in Ukraine continues to become more difficult for everyone. There again, the trend longer term, the monthly is positive, the weekly is negative. That's the one sort of fly in the ointment, so to speak, but the daily is definitely positive, indicating a sideways position. But wait, keep your powder dry, because this is going to be a good move in 2014. On the euro, there again, you're in a sort of flat sideways move. I'll scope this out just a little bit further to give you an idea where we are. Let's say a 5-year chart. You can see we're sort of trying to build this base to go higher. Certainly I'd want to be long this market as opposed to short, but again we're in a 65, which is a sort of transitionary type market. We're above the 50 line, indicating the trend is slightly towards the positive side, but caution, caution, caution. All these markets right now, they're very tricky because the geopolitical situation is very tenuous in our humble opinion. So here are the trade triangle rules for Forex, gold, and the futures markets. The most important elements are the weekly trade triangles for trend up and for trend down. We use the daily for timing. We use the weekly trade triangles to determine the trend. we use the daily trade triangles for entry and exit signals. Red weekly trade triangle, trend down. A green daily triangle, exit the position. A green weekly trade triangle, trend up. A red daily trade triangle, short-term trend down, exit position. You only take a position when you have both colors matching, the weekly and the daily. If it's green, it's positive. If it's red, it's negative or a short position. And that is how you successfully use the trade triangle rules for trading in Forex, gold, and the futures markets. I'm Adam Hewison for MarketClub. Thanks for stopping by. Every success using our service. Be sure to be on the lookout in the next week or two. We have a new service coming out that I think you'll enjoy, a new portfolio, I should say, that I think you'll enjoy just based on internet stocks. So stay tuned for that. Have a great weekend, everyone.